Hey guys, welcome to another one of our regular Squirrel monthly updates. I guess it's regular now because this is the second one. So housing market, look, it's starting to warm up a little bit, certainly warmer than it was during winter. It was pretty slow during sort of June, July, even August. But we've definitely seen some green shoots and some more activity. We've had more buyers out there. I think sensing that they can find a fairly priced property, and of course we're seeing a lot more interest rate stability at the moment. On to interest rates, that's interesting. Obviously we had the OCR change come through and it's now at 3%. The Reserve Bank's forecasting that the OCR could go up to about 4.25%, and we've seen a bit of a spike in wholesale interest rates as a result of what's happening overseas and expectation that rates could go a bit higher. That's largely priced into the market already, but we are expecting to see a small increase maybe in those 1 and 2 year fixed rates come through this week and next week and back up to about 5.25%. So expect to see those sort of 4.89, 4.95 rates disappear shortly. What's interesting is whether or not the OCR gets to 4.25%. At the moment, there's a big slowdown in China, and that's dropping commodity prices. Iron ore prices are right off the boil, along with things like nickel, copper, lead, and even Brent oil is down. So there's some quite strong deflationary forces out there at the moment. Obviously, supply side constraints and all of the problems that have been with shipping and supply and stuff are gradually easing as well. So inflation's not done, but the conversation is looking a lot more balanced now. The forecast for global inflation in the second half of this year is dropping to 5%, and I think expectations are that inflation could drop quite a bit by next year. I mean, the only thing that's really holding things up at the moment is what's happening in Ukraine and energy prices in Europe, along with still very tight labour markets, particularly in the US, and we're experiencing that down here in New Zealand and Australia as well. But all in all, my view hasn't changed. My view is that we won't get to 4.25% on the OCR. I'm expecting to see the Reserve Bank start to ease back on that sooner rather than later, to be honest. We might have another 0.5% increase from 3 to 3.5%. They've certainly indicated they're going to be aggressive early on, and I'd expect that to continue for a while yet. But I think as these signals start to appear that inflation's under control and as our economy slows down quite a bit, I just don't think we'll get there. But that's my view. Anyway, that's another monthly update from us. Talk to you again soon.